Hi traders, welcome back to the channel. Today we're diving deep into a topic that can truly make or break your trading career: psychological preparation for high-risk trading. You have got your strategies, your charts, and maybe even a bit of experience. But if your mind isn't ready for the heat, the market will eat you alive. So, how do we prepare mentally for this wild ride? Stick around to find out. Help others sharpen their psychological edge, and you will get great karma in the markets. Let's get started. Okay. Here is the deal. When it comes to high-risk trading, it's all about emotional resilience. We have all been there, watching a trade to go the wrong way, feeling that panic rise, and suddenly you are making right decisions. Whether you are trading forex, stocks, or binary options, the biggest challenge is keeping you cool when things don't go as planned. Imagine you are in a high-leverage forex trade on Euro USD, and suddenly, without warning, news drop that the European Central Bank is tightening policy faster than expected. The market moves against you in a second. At that moment, emotional resilience is the difference between making an irrational exit or calmly sticking to your strategy and riding out the volatility. You see, most traders think the battle is with the markets, but honestly, the real battle is inside your own head. Think about it. When the trade goes against you, what's your first instinct? Is it fear, anger? Maybe you feel the urge to double down and get back at the market? Well, let me tell you, acting on those emotions is a sure way to blow up your account. Losses are not the enemy. What you need to do instead is train your brain to anticipate the manage those emotions. I know, easier said than done, right? But the traders who consistently succeed are the ones who recognize emotional triggers and don't let them control their actions. You can't control the market, but you can control your reaction to it. Take a look at the classic example of buying stock. Some traders saw it drop by 20% in a matter of days, panicked, and sold at a loss. However, those with a steady mind saw the bigger picture and recognized that the fundamentals hadn't changed. They bought more at the dip and profited as the stock rebounded. Now, here is something you might not hear often. Losses are not the enemy. That's right. Losing trades are part of the game, especially when you are taking high risk. The key is to not let a couple of losses knock you off balance. The best traders out there have learned to accept losses without letting them mess with their mindset. In fact, they embrace it as a part of the journey. Think about it. Losses teach you something every time. They teach you about your strategy, about the market, and most importantly, about yourself. When you take a loss, instead of reacting emotionally, take a step back. Ask yourself, what can I learn from this? And here is the real kicker. The more you view losses as opportunities for growth, the less fear you will feel when they come your way. Quick pause here. If you're serious about mastering the mental side of trading, I have got something special for you. Join our Telegram channel, where we not only share daily insights, trading psychology, tips, and exclusive content, but the main focus is on providing successful trading signals. These signals will help you make informed decisions and boost your trading success. Trust me, the strategies and signals we share there will give you a psychological and tactic edge over 90% of traders out here. Link is in the description below. Don't miss out. The power of visualization. Alright, let's talk about one of the most powerful tools you can use to prepare for high-risk trades: visualization. And no, I'm not talking about some woo-woo magic. Visualizations are used by top athletes, business leaders, and yes, even traders. Before you place the next high-risk trade, close your eyes for a minute and visualize the different scenarios that could happen. Picture yourself calmly handling a losing trade or reacting logically to a surprise move in. Let's say you are planning to short gold because you expect a rise in US interest rates. Before pulling the trigger, visualize the scenario where the market doesn't react as you expect. by imagining that you are mentally preparing for the possibility that gold might surge despite your analysis. You are conditioning your brain to stay calm and follow your risk management plan no matter what happens. Discipline, your grounding force. Another thing that separates winning traders from the rest is discipline. It's not just about knowing when to enter and exit trades. It's about sticking to your plan when emotions are screaming and you to do the opposite. When you have a clear risk management strategy, that structure keeps you grounded. Whether you are risking 1% or 10% per trade, it's the discipline to follow your plan that will save you in the long run. Let's take the case of a trader who enters a volatile cryptocurrency trade, betting big on Bitcoin. The market moves violently, up and down by 10% in a day. A disciplined trader will have clear stop losses in place and won't get rattled by these swings. An undisciplined trader might constantly jab their stops or exit too early, potentially missing out on a profitable trade. One quick tip here: before you enter any trade, have a defined exit strategy. Know exactly where you are placing your stop loss, your profit target, and most importantly, stick to it. This eliminates a lot of emotional decision making. The market is unpredictable, but your plan doesn't have to be. Handling pressure without getting burned. Lastly, let's talk about handling the pressure. High-risk trading is, by nature, stressful, and stress can cloud your judgment, leading to emotional decisions. So how do you handle the heat without getting burned? The key is to detach yourself from the outcome of each trade. I know this sounds counterintuitive, but the more you can view each trade as just one small step in a larger process, the less attached you will be emotionally. Consider a binary options trader placing a high-stakes position. The pressure is immense because the outcome is binary, win or lose. If they attach their self-worth to this one trade, they are setting themselves up for psychological burnout. But by viewing it as one of many trades, they can detach from the immediate outcome and focus on consistent long-term performance. Detach yourself from the outcome, not in a careless way, but in a way that keeps you focused on the bigger picture. Trading is a marathon, not a sprint, and if you treat every trade like it's life or death, you are going to burn out fast. Focus on the process, not the outcome. And that's it, traders! The key to mastering high-risk trading lies not in your charts or indicators, but in your mind. Strengthen your psychological game, and the rest will follow. If you get value from this video, make sure to hit that like button, subscribe for more trading insights, and share this with your fellow traders. Also, don't forget to join our Telegram community for deeper psychological strategies, exclusive content, and top-notch trading signals that can enhance your success in high-risk trades. The link is in the description, and we're waiting to help you take your trading mindset and strategy to the next level. Thanks for watching, and until the next time, stay calm, stay focused, and happy trading!